Those who know the right questions must reach those asking the wrong ones, and sometimes even the lost. I protect my identity because truth has a body count. Welcome to the Anarchist File. You tap your phone at a coffee shop, a latte slides across the counter, the girl at the register smiles, the receipt pings to your inbox, and in 1.7 seconds, 3 separate institutions have logged your exact location, timestamp, and spending habits. Do you think you just bought coffee? What you actually did was notify a global financial dragnet that you're still compliant, caffeinated, and mostly broke. That's the real economy, not the one they teach you in high school, where supply meets demand and everything is a fairy tale of handshakes and balance sheets. No, the real economy is a surveillance network wrapped in velvet. It's an ecosystem where every transaction is a confession and every dollar is a GPS signal with an attitude problem. And the Fed is the DJ at this party. Controls the lights, the volume, the beat, and when to shut it all down. Now let's get one thing straight. The Federal Reserve is not federal, and it's definitely not reserved. It prints money like a meme page on Adderall and changes interest rates like a TikTok trend fest, erratic, and with zero concern for your rent. And you're supposed to just sit there, smile, and thank them for the economic stability that comes with 20% grocery inflation and $5 eggs. Trust the experts, they say. But when every expert looks like they've been on a government payroll since dial-up internet, maybe it's time to ask, what is money now? Who makes it? Who benefits? And why are we pretending like we're not being watched every time we move a decimal? Because here's the real kicker. Money isn't just money anymore. It's metadata. It's behavior tracking. It's algorithmic profiling masquerading as budgeting. You think the IRS wants your Venmo transactions for tax fairness? Cute. No. They want the receipts because control starts with surveillance, and surveillance starts with finance. That's what this video is about. Not just inflation, not just digital currency, but the full architecture of monetary control. From fiat fraud to central bank digital currencies. From paycheck taxes to programmable wallets that can and will lock if you behave improperly. This is not paranoia. This is policy, precedent, pattern, and Gen Z. You're finally catching on. Because we grew up watching our parents drown in 401ks they can't touch. Eras that tax them like enemies, and bank accounts that close the second your ID doesn't scan right. So now we hoard crypto, meme stocks, and cash under mattresses. Not because we're dumb, but because we're awake. The Federal Reserve doesn't just manage interest rates. It manages belief. It manufactures scarcity. It hides the costs of war, of welfare, of dysfunction behind digits and delays. And they hope you never notice. They hope you think the dollar is stable, that inflation is random, that the economy is just complicated. But here's the truth. If you, Don T, understand what your government has done to money, you don't understand money at all. So we're going to break it down fast, loud, and with no apologies. We'll talk about what the Fed is, what it really does, and how it's turned your paycheck into a surveillance tool. We'll decode financial reporting laws that criminalize you for using cash. We'll look at the digital dollar, the fedcoin, dream and what happens when programmable money meets central authority. We'll expose how every reform is just a fancier cage. And we'll map out how Gen Z is already breaking out. Because you're not waiting for permission. You're staking sats, riding DeFi waves, mocking fiat on TikTok, and calling out government lies in 280 characters or less. You've seen the games? You've read the receipts? You're fed up? And so are we. Let's be clear. The Federal Reserve isn't a bank, it's a vibe. It wears the costume of authority, talks like a priest, moves like a casino dealer, and prints money like it's running out of paper, which at this point would be the most honest form of scarcity left. You hear Federal Reserve and think legitimate, ancient, almost holy. But it's barely over a century old, and its creation was more backroom poker game than democratic miracle. Picture this, 1910, Jekyll Island. A cabal of bankers and politicos whispering over brandy, deciding how to centralize power without anyone calling it a coup. They didn't call it the Fed then. That came later after. The PR team figured out Americans like abbreviations more than monopolies. Fast forward 1913. The Federal Reserve Act passes under Woodrow Wilson, who later admitted he desold the country. Sold, that wasn't hyperbole. It was regret. But the ink was dry. And the trap was set. From that point on, money stopped being value and started being narrative, gold-backed. That was quaint. The Fed quickly realized, you don't need gold when you've got belief. Just print more paper, slap a dead president on it, and declare it legal tender. And suddenly, you're not an economy anymore. You're a story everyone agrees to keep reading. And when belief runs dry, inject fear, inject crisis, inject war. Because the Fed doesn't just survive. Chaos, it feeds on it. Every recession, every conflict, every bailout is a new opportunity to expand, print, and preach stability while quietly stealing value from everyone who works for a living. This is what inflation is. Not an accident, Not a glitch, a transfer, a quiet, elegant siphon they print, you pay. Not with dollars, but with your time. That's what inflation steals. Hours, years, energy. You work, you save, and by the time you can buy what you saved for, the price has doubled. And the talking heads on CNBC say, that's just the economy. No, that's theft. And the Fed doesn't apologize. It publishes FOMC meeting notes, dot plots, forward guidance. All of it dressed in the language of precision, so you, Don T, notice the absurdity of 9 unelected academics playing God with trillions while the rest of us budget around gas prices and grocery sales. You want to talk wealth gap? Don't start with billionaires. Start with a central bank. Every time the Fed prints, the value doesn't evaporate. It redistributes upward, through asset bubbles, through stock buybacks, through loans that never get taxed. The closer you are to the printing press, the less real the rules become. Meanwhile, you're downstream, wages flat, prices up, assets out of reach. And the narrative. Work harder. That's the hypnosis. They want you chasing crumbs in a maze they designed, while they feast at the center. And when it starts breaking down, when people notice that money doesn't mean what it used to, they offer you distractions. Left versus right. Tax the rich. Cancel student debt. Ban billionaires. Anything but the real enemy. A currency backed by coercion. Managed by a priesthood, and printed with no breaks. And the irony? They call it fiat, as in, let it be done. A spell, because that's what it is. Monetary magic, no asset, no cap, no accountability, just belief. Belief that this dollar, this app balance, this FedWire memo still means something when 40% of all dollars in existence were printed in the last 5 years. Think about that. Nearly half of the entire monetary base conjured into reality while you were trying to save, invest, or build something real. And what do they blame? Not themselves, not the printer, but you, for spending, for saving, or demanding too much. Suddenly, your stimulus check is the reason eggs cost $9. Not the fact that they injected trillions into BlackRock's veins and bought mortgage-backed securities like they were stocking up for a crisis they helped engineer. And when inflation hits double digits, they raise rates, which is code for, we're going to tank the economy now and act like it's your fault. So the average kid can't afford a house? The average retiree gets crushed. The small business folds, the dream shrinks, and the Fed gives a press conference. Jerome Powell steps up like a technoprist and says, we must remain data-dependent. Translated, we'll keep hiking until we see enough pain in your lives to make our spreadsheets look less embarrassing. It's not economics, it's alchemy, and you're the experiment. But here's the worst part. Most people don't even know what the Fed is. They think it's the government. It's not. They think it's accountable. It's not. They think it's boring. It's not. It's the most powerful institution in America, and it operates with less oversight than your local HOA. It audits you, tracks you, penalizes you, but who audits it? Who governs the governors? Who prints the printers? Nobody. They are the center, the axis, the God-tier, cheat code and a simulation you were born into and told never to question. But Gen Z is questioning it. Because when your entire life is digital, inflation isn't abstract, it's an error message. It's rent doubling in a year. It's food banks with Tesla drivers in line. It's student debt that never shrinks. It's crypto volatility you understand more than the dollar's decline. So you start asking real questions. What is money? Why is it scarce for me, but infinite for them? Why are my purchases trackable, but corporate bailouts invisible? And slowly, the veil lifts. And when it does, the game doesn't just look rigged. It looks fake. Because it is. A fiat illusion propped up by tradition, compliance, and spreadsheets. Nobody outside the Eccles building understands. But we're learning, and when a generation starts learning what money really is, the old empire trembles. So they broke the system. Spent decades inflating away your time. And now, with trust and money disintegrating, they're not repenting, they're doubling down. Enter central bank digital currencies. The final boss of fiat. To the normie, it sounds cool. Digital dollars? Modern. Convenient? Streamlined. To anyone paying attention, it's the endgame. Because CBDCs aren't just currency, they're code, and code-based. Unlike cash, which exists outside their database, CBDCs live entirely within the system. Issued directly from the central bank, programmable, traceable, and absolutely subject to permissions. Imagine money with a morality score. That's where this goes. They won't call it that, of course. They'll call it safety, financial inclusion, economic modernization. But once the rails are digital, the control is total. Spend limits, expiration dates, purchase restrictions, behavioral incentives, geo-fenced stimulus. All of it becomes trivial to implement. Climate emergency. Sorry, Your CBDC wallet can't be used to buy gas this week. Obesity epidemic. You've hit your red meat quota for the month. Political unrest. Suspicious donation. Your account is temporarily frozen for review. It sounds dystopian because it is, but the code is already being written. Pilot programs are live in multiple countries. The infrastructure is being quietly laid in the West. The Fed calls it research. Bank of England calls it consultation. China calls it mandatory. And it's not about speed. We already have speed. You can wire money in seconds. You can use Apple Pay, Venmo, Cash App, Lightning. The private sector solved that. What CBDCs solve for the state is control. Because the one thing they've never liked about cash is that it doesn't snitch. It doesn't log your coordinates. It doesn't require ID. It doesn't auto-tag you in a suspicious activity report because you paid $1,001 instead of $999. But CBDCs, they do all of that and more. Every transaction, every recipient, every keystroke, forever, and not just for you, for the person you paid, for the person they paid. Infinite regress. Your social graph, financial behavior, and risk profile fused into a permanent identity stack. No escape, no audit trail you can delete, and definitely no OFROMP they'll say, but you can still use cash. Until you can't, because once CBDCs reach escape velocity, once enough major vendors, payroll providers, and tax agencies demand it, cash becomes inconvenient, then suspicious, then illegal. You don't kill privacy with a law, you strangle it with friction. And here's the trap. They won't roll it out as tyranny. They'll roll it out as convenience. They'll say, instant refunds, universal stimulus delivery, no more bounced checks, safer than crypto. Green money for a greener planet. And most people will cheer, because they won't see what they're giving up. They'll scan the QR, load the app, link their ID, sign the user agreement. And within a few years, financial autonomy becomes a memory. Because once the ledger belongs to the state, you don't own your money. You rent your compliance. And the rent is due every time you step out of line. Donate to the wrong cause. Frozen. Post the wrong meme. Flagged. Buy too much foreign currency? Reported. Travel without permission? Blocked. The financial system becomes a behavior engine, and the state becomes your bank. That's not a future problem. That's a design goal. And when Gen Z figures that out en masse, it's game over, because we're not your parents. We don't trust government innovation. We watched it fumble every app, every rollout, every crisis. And we know damn well that the same people who couldn't build a working healthcare website are now pitching themselves as your personal finance oracle. Hard pass. We've seen what programmable platforms do. We know what happens when power centralizes in code. We watched PayPal suspend users for speech. We saw GoFundMe freeze trucker protests. We know TikTok autoflags misinformation and YouTube shadow bans dissent. You want that logic baked into your wallet? Good luck, because once it's normalized, there's no appeal. You can't argue with an API. You can't protest an algorithm. You can't petition a smart contract with a heart rate and a mortgage. The decision has already been made. The wallet just enforces it. And here's where it gets even darker. Imagine a future where the central bank doesn't just monitor spending, but optimizes it. Tells you how to live, gives you nudges, gives you scores, integrates your vaccine passport, your carbon footprint, your insurance rate, all of it, through the lens of economic compliance. And maybe they don't force you at first, they just give you discounts. Gamify it. Green badge. You get 5% off public transit. Red badge. Higher tax rate. And before long, you're not spending money or playing a game. One, you can never win. Because the rules change in real time and the house always wins. This is not a conspiracy. This is not a theory. This is what central bankers and policy wonks write about. Openly, in papers, at conferences, on panels sponsored by banks with logos. That could be Bond villains. They're not hiding it. They're modeling it. The only reason you don't know is because they hope you're not reading. But we are. And we're building alternative rails, decentralized assets, off-grid tools, local networks, peer-to-peer economies. Not because we're anti-technology, but because we understand that digital without sovereignty is slavery, and money without privacy is surveillance. So no, we're not going to applaud fedcoin. We're not going to beg for UBI injected straight into programmable wallets. We're not going to trade our last shred of autonomy for a faster refund. We'll build our own systems. We'll code that obeys us. We'll value that can't be canceled, and with a memory that outlasts every server farm and every bureaucrat who thought they could program a population into submission. By now, you understand the surveillance isn't coming. It's here. But what makes it stick isn't just software, it's law. Boring, sterile, bloated law, written in rooms you'll never walk into, enforced by agencies you'll never see, weaponized through banks you thought were just businesses. It's not a conspiracy, it's a compliance regime. And you've been in it since your first paycheck? The bureaucratic name for this system is anti-money laundering, or AML. Sounds noble, right? You hear money laundering and think, Mafia's offshore accounts? Suitcases of cash? The reality? Your Venmo history? Your PayPal transfers? Your $612 Zella Tuaro might flagged, filed, and sometimes forwarded to the feds. Because under AML, financial institutions are mandated to spy on you. Know your customer KYC laws mean that when you open an account, you don't just give your name and number. You submit biometric scans, government ID, proof of residence, occupation, and justification for your financial existence. Not just to verify identity, but to enable monitoring. That monitoring never turns off. Every withdrawal, every deposit, every card swipe, every suspicious pattern gets algorithmically flagged and dumped into something called a suspicious activity report, SAR for short. You've probably been SIR'd, you'll never know. You'll never see it. You'll never contest it. Banks file millions of these reports every year. They don't require probable cause, just suspicion, which means if you buy the wrong thing, tip too much, send money to someone overseas, or walk too close to a protest. SAR and the bank, they're not even trying to protect you. They're covering themselves. Because if they don't report you end, the government later says they should have. Fines, shutdowns, asset freezes. So they over-report, they flood the system, and suddenly, financial privacy dies, not with a bang, but with a checkbox. But it doesn't stop at reports. The next level is civil asset forfeiture. This is where things go medieval. In the US, the government can seize your property or cash, car, crypto, whatever without charging you with a crime. All they need is suspicion that it was involved in illegal activity. Their burden of proof on you. They don't have to convict you. You have to sue them to get it back. And most people don't. Because the cost of the legal fight is often more than what was taken. So they give up, and the government keeps the loot. Billions every year. A legalized shakedown backed by the courts, enforced by bureaucracy, and funded by your silence. And when you complain, they say, we're fighting crime. But ask yourself, what kind of crime is solved by taking cash from someone who is never charged? What kind of justice is served when a state can plunder your savings and call it procedure? None. It's not about crime. It's about conditioning. Get flagged enough times. You stop making noise. You stop police. You stay below thresholds. You avoid certain people, avoid certain apps, avoid certain ideas. That's the goal. Not prosecution, not reform, just quiet. Because a quiet subject doesn't build. A quiet subject doesn't protest. A quiet subject accepts the leash, and the leash gets shorter every year. Today it's cash reporting laws. Tomorrow it's social credit overlays. Today it's SARs and bank freezes. Tomorrow it's programmable wallets with hard-coded ethics. You think that's extreme? It's already happening. In 2022, Canadian banks froze the accounts of truckers and donors who supported a protest the state deemed unlawful. No trial, no defense, just a click. In China, citizens with low social scores can't book flights or trains. In Nigeria, cash withdrawals were restricted to force cbdc adoption. In the EU, there are serious proposals to ban anonymous crypto wallets and cash transactions over €1,000. This isn't theory, this is the scaffolding. In the US, why are building it too? Operation Chokepoint 2.0, ever heard of it? It's S. What happens when regulators informally pressure banks to stop serving legal but undesirable industries? Gun shops, crypto firms, content creators. They're not outlawed, just unbanked, starved, erased, without legislation. That's the new censorship. Don't ban it, just make it financially impossible. And the worst part? It's bipartisan. Every regime wants this power. Republicans talk about cartels. Democrats talk about equity. But both use the same toolset. Financial compliance enforced by algorithmic suspicion. The result? A net. Invisible, indiscriminate, and very, very sticky. Once you're flagged, good luck unflagging. Ask any content creator who's had their Stripe account frozen. Ask any immigrant who's been debanked for inconsistent documentation. Ask any protester whose crowdfunding got nuked. The digital age promised freedom. Instead, it delivered a bureaucracy with perfect memory and zero remorse. And you? You're the risk factor? The unknown variable. The anomaly in the system that must be tagged, traced, and eventually tamed. Unless, of course, you opt out. Not with violence. With intelligence. With alternative finance. With off-grid tools. With peer-to-peer networks that don't file SARs and don't care about your KYC. With systems that remember what freedom actually felt like. Because this isn't about money. It's about movement, control where people can transact, and you control where they can live, think, and speak. Cut off their financial oxygen, and they become obedient by necessity. That's what the state has learned. That's what the Fed facilitates. And that's why Gen Z is choosing a different road. Because once you realize compliance isn't safety, it's submission. You stop asking for permission to earn, to spend, to save. You start building systems that don't need permission at all. This was never about economics. It was about obedience. Inflation, debt ceilings, stimulus, cbdc, those are just the visuals. The real story is deeper. It's behavioral, it's spiritual. It's about shaping the way you move, think, and spend without ever laying a hand on you. They used to control people with walls. Now they use your wallet, and it's genius, because most people never notice. They think they're free because they can scroll and shop and stream, but that's not freedom. That's digital sedation. That's dopamine compliance in exchange for silence. What they don't want is financial sovereignty, because the moment you control your own money uncensored, untracked, unprogrammable, you become dangerous. You become ungovernable. You become what they fear most, someone who can't be locked out with a click. And here's the part they hate. You're already building it. Crypto wasn't a fad. It was a jailbreak. Not perfect, not clean, but proof that monetary rebellion doesn't need permission. It just needs vision. And every time they tighten the grip, every new form, freeze or fine, they push another generation into the arms of parallel systems. They taught us to be compliant. We taught ourselves to be sovereign. And no, it won't be easy. There are no utopias. No off-ramps without friction. Decentralization is messy. Peer-to-peer is slow. Privacy is inconvenient. But comfort is a leash, and you're not a pet. You're an architect. So build. Use cash while it still works. Stack sats like your life depends on it, because one day it might support local currencies, barter economies, trustless tech, anything that doesn't beg for central approval. Read the fine print. Question the terms. Reject the normalization of being tracked, rated and scored for basic participation in the economy. This is not paranoia. This is preparation. Because the cage is being built in public. The APIs are live. The partnerships are inked. The defaults are being hard-coded into every update, every app, every institutional pitch for frictionless finance. You are not paranoid for wanting out. You are lucid. You are early, and you are not alone. So when they roll out the fedcoin and try to sell you programmable money as equity, say no. When they require a QR code to buy groceries, say no. When they promise faster refunds in exchange for digital obedience, say no. Because freedom delayed is freedom denied. And this isn't just about money anymore. It's about who gets to define reality. And we redone renting reality from people who rigged the game and called it stability. You want peace? You need exit. You want power? You need autonomy. You want a future? You'll have to build it yourself. No permission, no apology, no regrets. Just forward. The story isn't over. This was the Anarchist File.